How's it going, guys? Welcome back to another video. Today we're going to be going over the most anticipated earnings for this week, what stocks you should watch out for, and how you should be playing these stock earnings, because there's a lot of money to be made during earnings season, but it can be risky if you're using the wrong strategies. So before we get started, if you are new here, please consider subscribing. It helps out the channel a lot and you will never miss a video. We post weekly videos every day, almost every day on the channel about stocks and options. So let's get into this video. The first stock that we have is going to be Canopy Growth, which has earnings before open on Tuesday. So Canopy Growth is a marijuana company, and overall the marijuana sector has been pretty stale. There's been a huge sell-off from February where most of the weed stocks were at all-time highs. Canopy Growth is currently at $26, which is 50% from its all-time high, and it's going to be a pretty risky one if you want to play earnings on it. I'm not incredibly bullish. If taxes are really high, end up becoming really high on marijuana, that could be a huge hit to a lot of these companies. So if you want to play Canopy Growth, I would do something safe like a June 18th cash secured put, probably around the 23, or if you're a little bit riskier, 24 strike put. So you would be selling one of these options and you will be receiving around $72 to $120 of premium for selling these puts. And we also want to note that if Canopy Growth stays above these price points, you will be making your full profit. And generally, if after earnings, if the stock remains flat, you're going to be making a lot of profit as well. The next stock is going to be Zoom, which has earnings Tuesday after the market closes. And Zoom is a pretty interesting one. All-time highs was almost at $600, and now it's at $332. It's had a pretty big downward trend recently as a lot of companies and businesses started to open up. The need for Zoom is becoming a lot less, but Zoom has proven to be an established company. It has great technology and has helped a lot of people connect with each other. So earnings is going to be pretty volatile. So if you want to play earnings, you could either sell some puts, which is going to be pretty expensive, or you could do a strangle, so which is going to be buying and selling, or buying a call and buying a put at the same time. So you could do next week would be fine. You could buy a 335 call and buy a 332.5 put, and it will be considered a long strangle. So as we can see here, we will make money if there's a huge upward movement or downward movement, but if the stock remains flat, you are going to be losing a lot of money. So Zoom, I'm expecting the earnings to be pretty volatile, moving in a big upward or downward direction, and a strangle would be a viable strategy for this company. Next one is going to be C3 AI, and this one it's at all-time lows, so earnings is going to be pretty interesting. I'm pretty bullish on this stock. IPO'd at around $100 in December, hit all-time highs of around $180, and now it's sitting at $62. So if you want to play this stock, you could just buy 100 shares, sell some cash secured puts, or buy some calls. The next company is going to be Docusign, which has earnings Thursday after the market closes. And Docusign is another pandemic stock. It's done pretty well. As we can see, the past 5 years, it's had a pretty huge run up from the pandemic. During the March crash, it was sitting around $77, and now it's at over $200. Docusign is just like Zoom, has been proven to be a solid company. Basically what they do is they help a lot of these companies provide digitally signature solutions. So a lot of during the pandemic, when everyone's quarantined, it's hard to get people to sign documents, and Docusign helps people digitally sign contracts and documents and stuff like that. So I'm pretty bullish on this. What I would do is I would either sell some cash secured puts, buy some calls, or you can buy some shares if you want. Next stock is going to be Broadcom. Has earnings Thursday after the market closes. Same as Docusign, and this one has had a pretty big run up from its all-time low, from its lows from the March crash. It's sitting at almost $500, and we're pretty bullish on this stock because it is a semiconductor manufacturer, and if you aren't aware, there is a semiconductor shortage going on right now. So there's a lot of demand for the semiconductors, and Broadcom is a supplier. So it supplies all the chips needed for a lot of smartphones, laptops, electric vehicles, stuff like that. And there's a lot of supply right now. So we're pretty bullish on Broadcom. So if you want, you can buy some call options, or you can buy some shares on this stock. So that's about it for earnings this week. We got a lot of great companies coming up with earnings. We're pretty bullish on some of them, or most of them, and you still want to be safe because during earnings season, there's a lot of volatility. Implied volatility is pretty high, so the premiums are going to be a little bit higher than normal. So cash secured puts are my recommended strategy always when it is earnings season, because we're capitalizing on that high implied volatility for that earnings crash the next day after earnings. That's about it for this video. Thanks for watching.